Hey everyone, this is Kirk here again at optionalpha.com, where we show you how to make smarter trades. And in tonight's video, we're going to go over all the trades that we made for Thursday, July 30th. Before I do, I just wanted to show you guys a little bit about some of the stuff that I've been working on here inside of trying to do this whole new trading alerts and current portfolio and kind of portfolio stats thing that we're going to be rolling out here in the future. So I've actually gone out and hired a developer to do this. It's going to be a 5-figure job for us to be able to get all of this integrated and make it look really nice and be updated kind of on the fly inside of the platform. But one of the things I'm now going to do is start going back through a lot of the trades, and you can see a lot of this data is just kind of exported here from Thinkorswim in our platform. So, you know, like all of the trades that we had in Facebook and Win and the closing trades, opening trades, etc. We're going to be tagging everything with the direction. So now we're going to start seeing in the future when this new kind of trading alert system and platform kind of rolls out for you guys, you're going to be able to see the direction that we're trying to go, the probability of success for the trades, our allocation, whether our allocation is small, medium, or large, etc., whether we're trading stocks, ETFs, etc., implied volatility percentiles for everything. So it's going to be really slick and very, very cool. So hope you guys are interested in that. And again, all I'm doing right now is just going back through and kind of populating as much possible historical data as I can. I don't think I'll be able to get everything all in one swoop, but we'll continue to go back through and kind of populate all the data. But again, everything's going to be in there for you guys. It'll be very, very easy and intuitive and hopefully make things a lot easier. And I love the fact that we're going to start having a lot of portfolio stats that we can start posting, which will make it really, really cool. So if you want to see anything in particular with this as far as different numbers, please let me know. Add it into the comment box in the trading alert page tonight under the video. I want to make sure that I am building this thing out and trying to include as much data as we can possibly throw into the platform. So in tonight's trading alerts, we have a pretty busy day. We had a lot of closing trades in earnings. It was a really nice day for earnings, which is great. Had a string of days where we've had some trades move against us, but today was pretty good. So we closed out everything. Profits and losses ended up being up on the day, which was really nice. Went ahead and closed out Crocs earlier this morning. Nice $52 profit on this one. I'm just covering these really quick. Facebook, really good profit on Facebook. This one to me was actually kind of the big surprise. So here's Facebook. You can see implied volatility drop, which that was no surprise, but I was actually a little surprised that the stock didn't move as much as it really should have, given the implied volatility was up in the 100th percentile. But there you go. That's another classic example of the fact that the market just overprices these moves, on average long term. So Facebook was a really nice win. Same thing with Win, W-Y-N-N. Really nice big profit in Win. And then in Whole Foods, we decided just to go ahead and take the small loss in Whole Foods rather than try to roll it out to the next weekly option or the next monthly options. And it wasn't anything that we didn't see any technical signal or anything like that. It was just purely, we already have enough trades on that we're kind of at risk with right now, and we're holding a lot of capital for these strangles, these earnings trades that we've rolled out. So in this case, the $54 loss, given all the other profitable trades for the day, really didn't phase us that much. So I didn't want to go ahead and roll that one out. So you could have, absolutely. I know I emailed a couple people who wanted to do that, and we worked through that through email today. But in our case, we just went ahead and bought it back for a small loss. As far as adjustment trades go, we did make 2 adjustments. They're both of the same vein in FXE and FXI. And all we're basically trying to do here is make slow, methodical adjustments to these positions. Now we've got multiple iron condors in each, and all we're doing is basically taking our furthest out call option on both sides, on both stocks, and rolling it closer to where the stock is trading right now. So in FXE, we took our 112 call that was short, we rolled it closer down to the 108 level, took in a net credit of 68 cents. And by rolling, what I'm talking about is we're buying back the 112 call and we're reselling the 108 call. So we're buying back the 112 call to close and reselling the 108 call. That net credit is 68 cents. That helps pad us and gives us a bigger overall credit on the entire trade. The other thing that we did in FXI is we rolled down our 46 calls down to the 42 strike. And again, that gave us a net credit of about $44. So here you can see with FXE, this is our profit loss diagram now, kind of post-roll. But again, we had that 112 call that was all the way out here, practically worthless. And so all we did is we rolled that call option closer to where the stock is trading. Stock closed today at 107.29. So we're just going to the options that are just beyond where the stock is trading, just outside of the money. just taking in a bigger overall credit. And again, that just helps reduce the overall risk on the trade. Same thing with FXI. So with FXI, all we did with the August position is we moved our 46 calls that were all the way out here. We started to move those into the 42 calls, okay? So this is just what we have remaining in FXI for August. It's obviously being challenged to the downside, but we've got a lot of time still left between now and expiration, so we don't want to kind of jump the gun and bet everything that the stock's going to go lower, the ETF's going to go lower. We want to make some slow, methodical adjustments. And again, our overall position is not too bad, so we can definitely make some adjustments in our overall position as well, but we want to do it slow, right? There's still a lot of time, almost 20 days to go until expiration. There's no rush here to make adjustments that are, kind of too hasty. New earnings trades that we got into, everything looks like it should be profitable. Everyone announced that we traded today after the market. EXPE is Expedia. We sold the very wide strangle on that, the 118 calls and the 97 puts. Took in a nice big credit of $1.75. And again, EXP had really good implied volatility. Not crazy high, but it was up in the 61st percentile and definitely high for its historical range. So again, what we're trying to do is just sell options far out of the money on either end. And for EXP, you can see we went all the way down to about the 15% level on each side. We're just being tested on the top side here just a little bit. The stock is currently trading at 116 and some change after hours, but our strike price is at 118, which should be more than enough to get us outside that expected move tomorrow. And especially given the fact that we took in a nice credit of about $1.75, our break-even point is up closer to around 120. So we should have some good movement between ourselves and the market and ample room to take some money off the table. In DEC, we decided to do the same thing. We did a nice wide strangle in DEC. We did the 78 calls and the 63 puts for a nice credit of 115. Same thing in DEC. If we look after hours, the stock is trading kind of a little bit right where a couple dollars, I think, below where it actually closed. But you can see that our break-even points are much, much wider than where the stock is right now. I don't think this one will be a problem at all tomorrow. And then the last one was LinkedIn. LinkedIn was obviously one of the big name ones. I'm glad we got into it. We did a very nice wide iron condor, much further than the expected move on either end. And on the top side, we sold the 260, 265 call spread. On the bottom side, the 190, 185 put spread still was able to take in a $1.40 credit for LinkedIn. And again, this thing had really high implied volatility, but because it was a really high price stock, we weren't able to sell a naked strangle or straddle on it. The margin's just too high to be able to do that. So even though implied volatility was really high, we can still get really great pricing with these iron condors. With LinkedIn, again, we tried to move a little bit further outside the expected move. So the stock today closed around $227. Expected move was about $25. So our beginning strike price on the bottom side at 190 is well beyond where the expected move was. The expected move was taking the stock down to around 200 on the bottom side and up to around 250 on the top side. And again, you can see on the top side, it was expected to go around 250, and we set our strikes just beyond that, about another $10. So we gave ourselves, kind of a $20 cushion on either end to let LinkedIn move a little bit more, and it sure did. I mean, it was all over the place after hours. It was trading up as high as 256, and now it's trading back down to 217. So this thing's been all over the map. Who knows where it'll be tomorrow when it opens up, but right now it looks like it should be a very, very profitable trade for us again, and we should make about $140 or so on this trade. So looks like some of these earnings trades are starting to kind of swing our way, but again, it only works out if you keep making these trades, right? If you stopped 2 days ago, you would have stopped right in the middle of making adjustments. You wouldn't have been participating in some of these trades that are now starting to make some money. So probabilities always work out. You just have to make enough trades to be able to let that happen. As always, if you guys have any comments or questions, please add them right below. Let me know what you guys think about the new trading alert thing that we're coming out with and the new portfolio stats. I'd really be interested to get your guys' take on that and what you guys think. And until next time, happy trading.